Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about CGS interim report. China Galaxy Securities Co. Limited offers a wide range of financial services to various clients. These include wealth management, agency trading, investment advisory, portfolio advice, margin trading, stock-pledged repurchases, and other services investment banking, equity financing, bond financing, structured financing, financial advisory, asset securitization, and diversified financing solutions institutional business. Prime brokers, seat leasing, custody outsourcing, investment research, sales and trading for institutional clients international business, brokerage and sales, investment banking, research and asset management investment trading, investment trading of equity securities, fixed income securities, commodities, and derivative financial instruments parent-subsidiary integration business, futures, private equity investment management, and alternative investment services. The company serves a diverse range of clients including multinational corporations, small and medium-sized enterprises, high-net-worth individuals, retail clients, corporate and government clients. The stock price skyrockets. What's behind CGS 105.13% growth? Cogstate Limited, ASX, CGS, an Australian neuroscience technology company, has seen its stock price surge by a staggering 105.13% in the past year. Several key factors have contributed to this remarkable growth. The company's record FY25 financial results, which included a 22% increase in revenue and a 96% surge in net profit before tax, were a major catalyst for the rise. Additionally, Cogstate's strong half-year update showed a 19% increase in total revenue and a 27% rise in clinical trials revenue. The company's growth has been driven by sustained demand for its cognitive assessment solutions in clinical trials and the broader healthcare sector. Its expansion into new markets and strategic partnerships, such as with ICE and Alzheimer's disease, have also played a significant role. The anticipation of launching an AI-powered product in FY26 is expected to further enhance automation, scalability, and differentiation in Cogstate's offerings. Furthermore, the company's maiden dividend declaration signals financial maturity and shareholder returns. These factors collectively point to a period of robust operational momentum and financial strength for Cogstate Limited, contributing to its significant stock price appreciation over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth. The company's revenue has grown significantly due to various factors. Key contributors include the expansion of customer base through multiple channels, enhancement of professional and international services, increase in trading volume and market liquidity, and exceptional interim investment results in equity investment and fixed income innovation business. Additionally, the launch of new financial products, such as CGT Bond Portfolio and 25 Xing Group 1, has also contributed to revenue growth. Revenue decline. On the other hand, certain segments have experienced a decline in revenue. The investment management segment saw a 2% decrease, while the wealth management segment reported a significant drop of $684,605. Additionally, commission and fee income declined by $31,201, and interest income from banks and other financial institutions within the Central Huijin Group decreased by $35,408. Overall, the company's revenue growth can be attributed to its diversified product portfolio, strong performance of assets under management, and leading positions in certain products. However, some segments have experienced a decline in revenue due to various factors. Net income and profit margins overview. The company's net income experienced a significant increase, rising by 47.86% year-over-year in two separate instances, pages 10 and 29. This growth was also reflected in an 18.92% year-on-year increase on page 28. The improvement in net income can be attributed to several factors. A notable contributor to the increased profit margins is the rise in commission and fee income, which grew by 31.13%. Conversely, interest income decreased by 7.91%. Additionally, a decrease in expenses and the reversal of credit impairment losses, up by 33.45% year-over-year, also played a significant role. The weighted average return on net assets increased by 1.53 percentage points to 5.16%, indicating an improvement in profit margins. Overall, the company's financial performance has shown a notable uptick, driven primarily by increased revenue and reduced expenses. The company's financial performance indicates a significant issue with its operating cash flow. Despite an increase in operating cash flows before working capital movements, the net cash flow from operating activities remains negative. Specifically, the company reported a net loss of 4,382,322 RMB in the first half of 2025. This suggests that the company is not generating sufficient positive operating cash flow to cover its expenses and investments. The company's debt level has experienced fluctuations in various categories. While total liabilities increased by 6.8%, interest-bearing debts rose by 2.53%, and debt instruments surged by 42.8%, bonds payable decreased by 16.4%. However, the overall picture is not entirely clear due to conflicting information. On the other hand, interest expenses have shown a more consistent trend. Despite a discrepancy in figures, the most reliable data indicates that interest expenses decreased by 12.57% or 12.6% from 2024 to 2025. The company's financial summary reveals mixed results across various segments and regions. Notably, wealth management, institutional business, international business, and investment trading business have performed well, contributing positively to the overall revenue. In contrast, the parent subsidiary, other, integration business has struggled, resulting in a significant loss of RMB 884,472. Unfortunately, regional performance is not explicitly mentioned in the provided summaries, leaving room for further analysis. Management is optimistic about the company's outlook, citing a significant year-on-year increase in net profit attributable to owners of RMB 6.488 billion, 47.86%. The company aims to maintain its leading position in retail services by focusing on Southeast Asia and aligning with national development policies. To achieve this goal, management plans to enhance operational efficiency through AI technologies, promote whole chain services through an institutional service ecosystem, and expand business through differentiated marketing strategies. Additionally, the company will focus on standardization and systematization to build core competitiveness and enhance internal synergy within the group. In terms of specific business areas, management aims to achieve significant growth in futures business, promote transformation of retail customer base, and expand cross-border business development. The company will also prioritize risk management capability, prevent/control major risks, and manage market risk through measuring, monitoring, and adjusting limit indicators. Overall, management strategy is centered around maintaining a leading position in retail services, while driving growth across various business areas through innovation, operational efficiency, and strategic expansion. The company has a history of paying dividends to its shareholders. In fact, it has recently paid an interim cash dividend of RMB 366,800,282 for the year 2025. This payment is in addition to a cash dividend of RMB 0.25 per every 10 shares, further demonstrating the company's commitment to rewarding its investors through dividend payments. That concludes the financial summary for CGS. Feel free to comment below, and I will be happy to answer them when possible.